Our topic today is about a killer, something we all carry around in our pockets. And no, I'm not talking about knife crime, I'm talking about this, the credit card. The research I did for this video genuinely appalled me. The credit card industry, I think, is a disgrace and is exploiting the poorest. And I have actually previously used credit cards and have even suggested to people to use credit cards in certain situations. I will not be using reward credit cards going forward as of today. And note, by the way, folks, this is not a video about the haram and halal of credit cards. And actually, from a fiqh perspective, it's probably fine to use credit cards in many situations. This is a video about the ethics and impact of credit cards. In this video, I will explain why even if you are someone who fully clears your credit card debt every month, you should stop using credit cards. I'll explain how credit cards are linked to hundreds and thousands of suicides every year, and I'll talk about the mega industries built upon flogging you credit cards and why you can't trust them on this point. Let's begin. I'm Ibrahim Khan. I've been studying economics and traditional Islamic sciences for over 13 years now. I've been lucky enough over the years to have been covered by various publications and have authored a book on halal investing. IFG started with my co-founder Mohsin alongside our legal careers in the city. Today, IFG is, alhamdulillah, a team of 20 plus people, and we serve the community through IFG, our content arm, and Curate Capital, our investment arm. Look, I'm not going to beat around the bush with this one, sugarcoat it however you will, but the credit card industry makes a ton of money from interest payments, and the APR they charge is completely egregious as well. This is a piece of research that shows how the average credit card company's revenue breaks down. As you can see, by far the biggest number on here is interest income, which is haram of course, followed by interchange income, which is fine. And the interest and the fees that these credit card companies charge is really horrific and usurious. These are not token amounts. The cheapest rate I could find on Compare the Market was 23.9%, and the highest I found was 464%, which was American Express. Even leaving aside of Amex because it's skewed because of the annual fee that you have to pay, you're still looking at a 50% APR as the highest amount. Now, it has to be said that different card companies have different models, and some are far more focused on interest than others. Chase, for example, earns 110% of their interchange fees in interest. Citi earns 806% of their interchange fees in interest. And logically, Amex, which is less focused on the interest income, actually earns 0% of their interchange fees in interest for their gold and platinum charge cards. Here is a graphical view that shows you this. As you can see, cards like Discover and Citi are far more focused on interest, and therefore they are incentivized for you to default on them at some level than others. Logically, the way that you maximize profits is by going after certain demographics that have some income but perhaps not too much, and they are then defaulting, and then you make a profit on it. Politico explained this in a great article where they explain that in America there are certain financial institutions that specifically target those demographics that would perhaps need the credit and may also end up defaulting. In particular, armed forces and people who shop at discount stores like Walmart. And they also point out that 8% of bank customers end up making 75% of all of the overdraft revenue that they actually make. But before Amex customers start feeling pleased with themselves, there's something for you to be a bit embarrassed about later on in this video. Why is all of this such a big deal? Because debt has a real cost associated with it. We all hear the shocking and dramatic coverage about gun crime in America, but in reality, there are about 50,000 deaths due to guns in the USA every year, and about half of those are suicides. So we're looking at about 25,000 murders. Now, debt causes suicide. 16% of the 800,000 or so people in the USA who committed suicide did so in part due to debt. That's 128,000 people, or 5 times more people than were murdered in that year, were effectively killed by debt at some level. And you know what? Murderers go to jail, or in the case of America, get the death penalty. But bankers and credit card company bosses, they retire to the Hamptons and have a privileged life in the suburbs. And in the UK, the numbers are equally bad. Over 420,000 people in problem debt considered taking their own life in England last year. More than 100,000 people in debt actually attempt suicide every year. And people in problem debt have 3 times more likely to consider suicide than people not in problem debt. And when we say problem debt, we mean debt that has forced you to fall behind on your payments or have utilities cut off from your house. So any business that is based on predatory consumer lending, in my humble view, has indirect blood on their hands. This includes predatory credit cards, and by the way, it also includes all major banks who make a killing from overdraft interest and fees. 30% of their revenue or benefit associated with you using your current account for your bank is actually from just the overdraft payments. Look at HSBC, my current bank. It is charging 40% overdraft interest. And the worst affected by this are the poorest, frankly. Something the FCA, our regulator, has picked up as well. In a recent report, they actually pointed out specifically that a small proportion of people, the poorest, seem to generate significantly more contribution than others. And this is because they may be vulnerable customers. And the FCA has said that they are flagging this as a major issue. And you might be thinking, hang on, I clear my debt every month, so this isn't really about me, is it? No, it is. Your rewards and bonuses that you benefit from every year, well, that could be blood money. Let me explain how. CNBC recently covered a study done by economists, and as you can see, Agrawal and others in the study, they concluded that there is an annual redistribution happening of more than $15 billion from those who are less educated to those who are more educated, poorer to richer, etc., etc. So that means there is $15 billion net migration from the poor to the rich happening. Effectively, the poor are subsidizing the rewards and benefits that the rich are getting disproportionately. And there's an even more subtle form of discrimination going on, because you see, to get an Amex, you need to be earning a certain amount and you should pay a membership every year. So the average man on the street can't actually get access to the most exclusive Amex cards, which offer the most rewards. You also need to be financially literate to even know about reward cards in the first place and the benefits that come with them. So instead, the average man on the street is stuck with a bog standard credit card which charges tons of interest and not so much by way of rewards. The merchant who owns a shop, who is having to pay the higher Amex fees, just raises his prices a little bit across the board in order to deal with this additional Amex cost. But of course, only the Amex customer actually gets any of that rebate. The average man on the street has to pick up the bill because everything is slightly more expensive, and he also ends up running the risk of falling into more interest because of this price increase as well. So the next time you use your reward card, understand that you're probably indirectly causing some kind of suffering to some poorer person somewhere else in the country. One of the biggest pushers of credit cards and bank accounts are comparison websites. These comparison websites are only to be trusted insofar as you understand their economics properly. Sure, they will help you find a good deal and generally guide you around things. They might even set up charities and what have you to help people in debt get out of debt. But when they're helping guide you and find you the best credit cards, it's like a trusted guide helping you find the most comfortable noose to hang yourself with. Let's have a look at the Money Saving Expert sources of income. Money Saving Expert is owned by Money Supermarket Group, and they make these annual accounts and returns that they have to put on the website, on the internet, because they're a listed entity. And they explain that Money Saving Expert, they make their money from credit card loans, savings accounts, loans, current accounts, mortgage products, a whole range of different products. Now, I have to say that Money Saving Expert, like other comparison websites, have done an incredible amount of work financially educating people, and they've also done fantastic work campaigning on various points through, in particular, Martin Lewis, who's a champion for comparison websites generally. But the stark reality is that if we look at the money Money Saving Expert has made, it has made 103 million in revenue, mainly by pushing credit cards and lending products. Look at the NerdWallet website. There's a reason why they put the most important things first. And as you can see, the most important things are breakdown cover, bad credit loans, i.e. the most high risk and the ones that are going to have the highest interest and overdraft. Then you've got secured loans, business bank accounts, loans, mortgages, current accounts, business loans. 6 of the 8 products on here are loan and credit products. The second most important one for a NerdWallet is bad credit loans. And this is likely because it pays out the most. Why does it pay out the most? Because there are massive defaults on these kind of products and the rates they charge are higher. So there's enough profit to be able to pay out NerdWallet a decent amount as well. And who will be the most vulnerable to this stuff? The poorest. So why do these comparison websites, who appear to be so benevolent, do this? Because the way that we regulate our financial products is unfortunately bonkers. Gambling, you can walk into a gambling shop as long as you're 18 with no regulation whatsoever and gamble away as much or as little as you would like. Gambling shop managers and workers are trained not to intervene if someone looks like they're gambling away a ton of money. Credit card loans and overdrafts, you will see the mass marketing on billboards and on the underground and on buses. You're allowed to do that according to our regulatory system. And it's very easy to give promotions to affiliate marketers as well to push this out for you, i.e. comparison websites. Now, investments where you will actually end up making money, they are tightly regulated and much harder to market. So comparison websites naturally take the path of least resistance where there is an effective business model for them and push the most mass market product which offers them the most recurring fees, and loans are exactly that. Bank and credit card companies make a fat margin on the fees and interest, so they're happy to pay comparison websites that affiliate fee. And because once you're in debt, you stay in debt basically for the rest of your life in most people's situation, it's a great source of recurring revenue as well. So it might appear saintly to be helping the consumer by comparing the options, but let's take 0% balance transfer cards, where the idea with these cards is you can transfer over your entire debt with one card over to another card, and comparison websites help you find a balance transfer card to transfer over to. But if you know that the default rate for these balance transfer card is up to 50%, i.e. 50% of people will actually need to start paying the extortionate interest that comes after the interest fee period. If you know that and you're still willing to sell people that 0% balance transfer card and encourage 0% balance transfer cards in the first place, how is that acceptable? So am I saying credit cards are haram and can never be used? No, I'm not saying that. Am I saying that these companies are doing something illegal? No, I'm not saying that. But do I think that there is some deeply unethical practices and some kind of harm that is arising out of the use of credit cards? Absolutely, I am saying that. And look, if you're not using a reward card and you're literally clearing the payment without any interest every month, you do benefit the credit card company with the interchange fees, which is fine, it's halal, just like you would with your bank account, which also benefits from the interchange fees. So in one, you support a credit card company that does evil things with interest if you mess up, and the other, you benefit a bank that does evil things with interest if you mess up. So either way, it's a bad situation, but we don't really have an alternative right now to be able to use instead of our existing financial systems rails that are established. The reward cards, I'm personally off those. I don't really want to benefit from the exploitation of others, and even if there's a hint of doubt that is happening, then I would want to avoid that. That's it for today, folks. I would love to hear from you if you use credit cards, if this video has changed your mind at all, or do you disagree with me entirely and you think I've actually got the wrong end of the stick here, and actually use of credit cards within limits is actually perfectly fine. Let me know in the comments below. Until next time, assalamu alaikum.